levels on Monday, but yes, today it did hit their record high levels. The Nifty Bank did hit their record high levels at open, but from there on, the gains have fizzled off both for Nifty Bank as well as for the benchmark indices. And as you can see, the benchmark indices are actually trading flat with a negative bias as we speak. You have Nifty Bank that is trading with gains of about 0.2%. Let's talk about the list of losers in trade today. And the first up, you have Hindalco that's down about 4.5%, followed by Divi's Laboratories. Remember, Divi's Laboratories took a sharp knock on Monday post its earnings. It had missed estimates by huge margin. And today as well, as you can see, Divi's Laboratories trending lower, 4%, almost 4% downtick coming in for that one, followed by Power Grid, Tech Mahindra, SBI Life. They are the losers on the Nifty as we speak. Adani Ports, Coal India on the other side are the top gainers. Along with that, you have IndusInd Bank and Adani Enterprises as well, that's holding on to strong gains. Remember, Coal India is near its 3-year high levels post a stellar set of numbers coming in for Coal India. So yes, that's one of the stocks that is on everyone's radar as well. But let's talk about what are the sectoral indices doing today. And PSU Bank Index once again is actually powering ahead, outperforming all the sectoral indices, outperforming benchmark indices as well as Nifty Bank. Your PSU Bank Index that's trading higher by about 2.3% in today's trading session as well. Along with that, you have Realty Index that's holding on to marginal gains. Along with that, you have FMCG as well holding on to marginal gains, about 0.3%. But on the flip side, Metal Index, that's the one that's the top sectoral loser as we speak, 0.8% downtick coming in for Metal Index, followed by Pharma as well as oil and gas sectors. But we've had a lot of earnings actually pour in over the last 2 days. Yes, we were shut for a break yesterday, but we did have a lot of companies report its earnings, and we also had Sheela Foam that reported its earnings. On a quarter-on-quarter basis, if you look at it, there's a downtick in the revenue as well as revenue. If you see, the revenue has seen a downtick approximately 1% on a quarter-on-quarter basis, but PAT was higher by about 26%. You had the EBITDA margins also that's come in higher at around 10.9% versus 9% on a quarter-on-quarter basis. Let's bring on board the management for Sheela Foams to understand how the trajectory looks ahead for the company. We are now joined by Rahul Gautam, who is the CMD at Sheela Foam. A very good morning to you, sir. Thank you so much for joining us on ET Now. There's Cheryl on the other side. And let's talk about your earnings for the quarter gone by, sir. Except Australia, all the geographies have witnessed a decline in revenue. Is your company facing some tough challenges from regional companies offering similar products in mattresses product lines? And also, if you could tell me, what is your strategy to address these challenges in order to maintain your market share and actually grow further on?
Thank you very much for having me here. So first, let me just respond to the Spanish drop, and that is primarily on account of the Ukrainian war that is going on. The entire Europe has gone down by about 30%, and I think we are still very lucky to be looking at 17-18%. But coming back to your comparison on a quarter-to-quarter basis, I only need to say that today the uncertainty and the volatility, and that's not for today but for last year, has been so much that real comparison between a quarter and a quarter is probably not the right thing to do. And the right thing would be really to look at the H1 and the H2, because if you go to last year, the Q1 was completely muted, and Q2, had a pent-up demand, etc., and that really shot up. So if you look at the H1 and compare it to the H1 of this year, we have grown by 15%. And I think that's the trend, and that will continue.
Very good morning, Mr. Gautam. This is Adhiraj joining in. Pleasure speaking to you on ET Now. Now, sir, there is a decline in the top line across the mattresses, furnitures, foam and comfort foams, etc. But while technical foam is growing at robust rates, please enlighten us if you are observing such a trend across your entire industry, and if there is any particular shift in consumers' choices of these products. Sir?
So that's a good observation, and my response to that is that, as I was saying, that over periods of time, that like Q1s and Q2s, there is this uncertainty and volatility that's happening. We also observe that this is happening segment-wise or sector-wise, and therefore the auto sector, to which we cater a lot of our technical foams, that has seen an uptick. And that has seen an uptick because it was again stopped for a long time for want of semiconductors and for want of production. So that's because that market has kind of gone a little faster than the others. That's the reason that we see the movement in B2B. But all other sectors, we will have to definitely look at a little bit of a larger span of time. But let me assure you that no, there is no drop in the market share, or there is no drop in even the market size. But it's just a question of shifting of time from here and there.
Right. Let's talk about what's happening with the raw material costs, and considering this commodity softening, especially in your raw material prices, are you actually looking to reduce the prices now in order to aid volumes? Also, if you could help me with what sort of margin trajectory are you envisaging from now?
So raw materials have also again been fluctuating, but right now, as you rightly saying, that there is a drop in that and moving. But let me just say that in our mattress side and the branded category side, Sleepwell side, generally, even when the raw material goes up, we do not increase prices, completely to commensurate or pass on the increases. We do that prudently because we know that prices in these things cannot be moved around, just being correlated to the commodities. And therefore, I would say that at this time too, there is no need for any reductions. At best, a little bit of promotions can come on, but otherwise we are in the right range.
Considering all of that, sir, then how are you seeing your revenue forecast for the entire financial year then?
So what I'm seeing right now, you see, that our category is quite related to the wedding times, and the marriage calendar has just started on the 9th of this month, which is yesterday, and it is going to go on till the middle of December. I see a good or a very good uptake in this period. And then we go along to the balance part of the year, which should behave very similar to the pre-COVID times. So at the end of the year, I see that we would be in a reasonable plus.
Right. That was Mr. Gautam. Thank you so much for speaking to us here on ET Now this morning.
Thank you.
Moving on.
Thank you.
Right. And moving on. Let's follow the trajectory of the path to profitability for some of the new age tech stocks like Paytm, PB Fintech and Nykaa. My colleague Sharad is here to tell us more. Sharad?
Well, yes, at first we pick up Paytm. The numbers came in better than estimates, both the top line numbers and the operational numbers as per the brokerages. And the company has maintained its guidance of turning profitable by September 2023. There has not been any upgrade in the guidance as such, but they are maintaining the guidance target. Apart from this, two important factors to look out. First is the company is expected to expand its monetization base across both the users as well as the merchants, and they are banking heavily, especially for the UPI business as well, which will translate into more volumes. Apart from this, the brokerage are also expecting that the Paytm will be actually hitting the adjusted EBITDA break-even level in the middle of calendar year 2023 as well, and they're expecting a 40 to 50% revenue growth over the next few quarters. Policy Bazaar, if we see over here, PB Fintech, they have stated that they are confident of being adjusted EBITDA positive by the fourth quarter of FY23, and this also applies for their credit business as well. Now going ahead, they have also stated that the brokerages have stated that they will turn positive by FY24 as well, and the tone is very positive on the profitability going ahead. And the third stock we will be focusing on is Nykaa. Over here, management stated to ET Now that they're expecting a 200 basis points improvement in their gross margins over the next few quarters, and they expect the cost to sustain at sub 10% level going forward. Now, margin improvement is expected to come in due to increase in the private brand mix as well as ad income contribution. Now, Zomato's numbers are expected to come out on November 10 itself, and Cartrade, which is also a new age tech company recently listed, they have not declared their numbers yet. But in first quarter itself, Zomato did state that they are expecting a double-digit contribution in the margins in the long term.
Thank you so much for that, Sharath, for actually outlining how how the commentary for most of these new age tech firms is actually changing and turning to the positive side. So let's bring on board our experts for today. We have Kunal Bothra, as well as we'll have Vijay Chopra joining us very shortly from here on. Very good morning to you, Kunal, firstly, and it's a sigh of relief to see all of these new age tech companies actually talk on a positive side right now, and I'm sure that these feedbacks are taken very kindly by the investors as well. So where do you see the trajectory for these companies now?
Well, absolutely. I think it's good sign finally that you're seeing some sort of positivity coming across in terms of fundamentals, results, etc. But then on the prices, I would wait out for a dramatic change in terms of indicators. Now, how the indicators are poised for Paytm, as you can see on the charts, on the top grid is where I've placed the stochastic oscillator. It's an indicator which tends to give you a sense of how the trends are shaping up. Still, as of now, the stochastic is not anywhere closer to a breakout for Paytm. Now, specifically, I think the breakout could probably happen once the stock crosses about the 700 mark. So it's always far more prudent to wait out for the first 5% or 7% to be taken out for the stock, because that could probably give an indication of how strong an underlying trend or a demand is for the stock price. I would sense only about 700 is where the floors or the ceiling would open up for Paytm, where the stock may go back towards the levels of maybe 800, 840, which was the high the stock had made in the month of July. So above 700 is where I would suggest a buy on Paytm, and for a target potential which could be on the tune of 800 to 840 approximately.
All right, so that's the view coming in on Paytm from Kunal. But I believe we have Vijay also joining us on the show. A very good morning to you, Vijay. Thank you so much for joining us on Buy Now, Sell Now. And today we've decided to put the BNSN lens on these new age tech companies. And the reason being is that most of these companies now, the commentary is turning positive. If you see the today's stock price movement, and for Nykaa for the past few days, it has been a good up move. Where do you see these companies headed from here on? Do you think it is too early to actually celebrate that there will be a turnaround for these new age tech companies, or what's your view on them?
Well, good morning. I think that, when these companies got listed, they were chasing valuation and not value. My sense is that until and unless we see deep value in the balance sheet, we see good cash flows happening. We see that there's profitability on the books, and there's dependence on private equity money, which primarily, propel them to do a lot of advertising and, burn cash like anything. So that thinking has to go. They have to run like a normal brick and mortar company for some time. They have to have that thinking that we need to do a profit. We need to generate profits and cut down on unnecessary expenses, unnecessary ad expenses. They have to be innovative in the sense that they have to do business not by burning cash, not by just doling out discounts. But yes, I think that if we are seeing some kind of a positive trajectory, I'm fairly bullish on Zomato. We have not mentioned that company. So as far as Zomato goes, I think that it is one of the best placed companies as of now. And I think that Zomato has the potential of going back to 120, 130. If you talk to me about Nykaa, we saw some kind of a run up. But again, it has to be substantiated with solid numbers and profitability. I'm not talking about, getting more customers and the gross merchandise value, which anyway goes up during the Diwali time. But I think that this has to be sustainable. Although they've shown a good quarter, but this sustainability has to show up. As far as Paytm is concerned, when it was when Paytm came to the fore and they got listed, the competition level has gone up multiple times. So we've got PhonePe, we've got Google Pay, we've got so many payment, MobiKwik and other platforms wherein people can participate and people can use that as a transactional platform. Looking at the competition, Paytm also needs to do something drastic to bring profits on the book. And I'm sure that, the kind of network these companies have made, if we slowly and steadily see profits coming on the book, so, the views would definitely change. But again, amongst all the companies as of now, which are the new age tech companies which got listed last year, I think Zomato is the best placed company according to me.
Right, that was Vijay's perspective coming in. But thank you so much for speaking and giving us that. Stay with us. We're stepping into a very short break. But when we return, we'll be back with the queries segment. So don't go anywhere. And viewers, let the questions pour in.
Co-powered by OLX.
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
It's not always about buy, sell or profit loss.
After a gap down start, there is no buying.
It's about making you market ready with insights from the foremost market anchors.
Stocks open sharply.
The Nifty Bank Index is down. Momentum has in fact come into the market.
And the views from top-notch technical analysts. Join them talking business, markets and earnings every trading day from 8 a.m. to 4 p.m. only on ET Now.
It's the daily grind that gets me going. Beating myself over the details. The tiny bits, the nuggets you tuck away. Somewhere you spot smoke and you look for the fire. At the end of the day, you don't want the froth. You want to skim the foam. And get your caffeine kick in a way that it hits that sweet spot. Yeah, just like a good cup of coffee. A real story with all the right elements that connects all the dots does not come in an instant. I'm Vikram Oza. Join me on ET Now.
Start your trading day with non-stop updates and uninterrupted trading ideas to power up your portfolio with unmatched experience and analysis from our market experts.
In the market, right here in ET Now.
We are trying to make a comeback. It's a smart start.
Sensex is up more than 400 points.
Management is now with us. Overvaluation case.
See that 17K.
Watch the opening show from 8 a.m. to 10 a.m. ET Now. Break free.
When you are India's most experienced market anchor, you don't just ask the right questions, you make statements.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money. If the normalization in the world will happen, demand, which in a sense got destroyed, will automatically make a comeback.
When you believe in India's growth story, you will be known for your acumen.
The long-haul FII, who looks at India as still a promised land for an country.
Welcome back. You're watching Buy Now Sell Now on ET Now, and yes, you had the Nifty Bank that hit an all-time high level today. You have also Sensex that was kissing distance from that record high levels, along with Nifty as well. But in this particular market scenario, how should you actually try to balance out your portfolio to make sure that you do not have too much risk coming your way, and how can you protect the wealth that you've already been able to create? So Vijay, let me come to you on this one. What should our viewers do, given the fact that the markets have risen pretty sharply off late? So, you know, how should one actually adjust their portfolio in order to protect their wealth?
Well, I think that every investor should look at cash flows and profitability. Positive balance sheets, companies which are not leveraged, which are not having any kind of loans on their books, they should look for such companies, and there is definite money to be made. Look at futuristic business models. And I think that, you know, even banking and financial services, so quality NBFCs, quality banks look good. Pharmaceutical sector looks good. And I think that, one can start nibbling into quality IT stocks as well. The stocks like TCS, Infosys, HCL, LTTS, LTI. So all these companies which are top-rung F&O companies, I think that they are good buys at this time. One should start nibbling into the same. But again, don't get into frenzy. As I said earlier, that these frenzy stocks which come and go, they are flash in the pants. They perform for a couple of days and then they are over. So I don't think you should go there. So I think PSU banking looks fantastic even at these levels. So there are selective banks. I think that banks like PNB should do well over a period of time. Look at the the kind of size it has and the market cap. It is around 44,000 crores, and I think that looking at the size of PNB post, so many banks have amalgamated into PNB. So it should be a good buy, good long-term buy. I think that PNB has the potential of going to 75, 80. So look at these buys. Even SBI in a correction is a great buy. Union Bank in a correction, one can buy. Canara Bank. These banks are wonderful banks to get into. So you can protect your portfolio actually. Get into some quality pharma stocks as well. So you can start nibbling into these. So these are not overvalued. They have corrected and we are waiting for them to rebound. So IT, pharma, selective banks, I think are very good for portfolios at this point of time.
Right. Thank you, Vijay. That was Vijay's perspective coming in. But now we move to the query segment. Viewers, you know the drill. We are live on Facebook, YouTube and WhatsApp with the number flashing on your screen. And as you know by now, Sell Now is your one-stop destination to all stock-related queries. And let's begin. Our first question is for Kunal from TP Vinod from Tamil Nadu. He's holding 60 shares of PI Industry at 3,240. He's saying today it's almost 10%. Should he book profits today and buy back after a few weeks? Or what else should he do?
I think you should definitely look to hold on. I would not sense any reason to book out profits. Now, of course, the initial ideology is how did you enter the trade? I mean, what was the perspective? Whether you entered in just for the results play or whether there was a more of a positional bet or a stronger bet for the stock. So I think that is something which probably would categorize the base reason for or the rationale for staying on to the trade. Ideally, with such kind of a strong up move post results, when we see into the stock price goes into a different level of price range for itself. So what was earlier a range of maybe 2,800 to 3,400, we can expect that the range shifts from 3,400 to maybe even 4,000 plus for PI Industry. So if you're not in any kind of a hurry and you're looking to stay for a longer term or a medium term play, I would suggest to stay on.
Right. This next one also is coming your way, Kunal, actually. Saumitra Joshi has written to us and he's saying despite everyone advising against Ujjivan Small Finance Bank, he actually picked up a decent quantity of this particular counter at lower price. And this is post going through management con calls. So now he wants to know that what should he do, because the stock has already doubled in a very short time, which means that he's sitting on good profits. So Kunal, what's the way forward for Ujjivan Small Finance Bank? What should he do?
See, I think at this point currently, it could be a good time to book out, some profits over here, maybe a 50% profit. So what's actually happened is that the stock has moved up higher. The volumes have increased substantially in just the last 4 or 5 days, which means that the entry for most of the participants is on the higher side. And when you see such kind of a overweighted volumes at the fag end of a price rally, we expect the stock to get into a sluggish consolidation or a correction. So whichever way we look at, if you've made decent amount of profits on Ujjivan Small Finance Bank, I think at current levels of 29.30, it makes a lot of sense to book out 50% or more profits over here, and then look to buy back again if the stock comes back closer to 24 levels.
Right. Vijay, this one's for you. Jami is writing to us from Bangalore, holding 1,000 shares of Coal India, bought at 250. What would be the right time to sell is what he's asking.
Well, I think that if somebody wants to book profit, it was a good idea to book profit around 263, 265. But again, in this season, generally we suggest our customers to buy Coal India around around the last quarter. So buying Coal India in January for dividend play is a fantastic idea. But yes, I think that looking at the energy situation globally and in India, Coal India should keep on doing well. It should be accumulated on corrections. So it has already risen and hit about 264 today. So I think that if you have not booked profit, just hang on for some time. You might get this level again, and then you can book profit and buy in a dip. So I would say that if you get Coal India anywhere between 225 230, it would be a wonderful buy.
Right. This next one is also coming your way, Vijay. This one is coming from Ramashankar Chandrasekhar, sorry. He wants a view on data patterns for a long term, about 3 year plus is the investment time horizon that he's looking at. But he's asking, is it too late to enter right now, or should he look to wait for correction?
Well, he should wait for. I think that data patterns has already seen a decent run up. And as far as the fundamentals of the company go, it needs to match up revenues. So I would say it's not a good time to enter. If you want to enter this company, if it corrects around 950, 1000, it would be a good time to enter there. But yes, there are huge amount of opportunities available. As I mentioned earlier, there are metals which we can get into. Look at Vedanta, look at Tata Steel, look at a JSW Steel. These companies, although we are seeing some correction in metals today, but I am fairly bullish on metals with a longer term perspective. It's a super bull run in metals. So why not find out companies which are trading at a 5 or 6 price to earning, and there is a potential of doubling your money over a period of next 2 to 3 years. So I would say that look at a Nalco, look at a Hindalco. These companies would pay out good dividends, and the companies would show growth. Definitely the world is looking at India for metals, because people are skeptic about China. So India would get a lot of business in the next few quarters. So look for cheap bargains always. Look for places where you cannot lose money. The chances of making money are higher. So I think metals give you that opportunity today.
Right. Stay with us. We slip into a short break. Coming right back with more queries.
आग को फैलने से रोकना मुश्किल है, पर नामुमकिन नहीं। अब फायरवॉल टेक्नोलॉजी के साथ सेंचुरी प्लाइड क्लब प्राइम आग से बचाए।
Will snow days be a thing of the past? Or are we smarter than that?
Presenting partner Herbalife Nutrition. Co-powered by GE, building a world that works. E-mobility partner Olectra, pioneer in electric mobility in India.
मैं चाय नहीं पीता। हे एक मिनट। भुजिया के बिना चाय नहीं पीता। पिकाजी है ना? हाँ।
Amaji loves Pikaji, loves Pikaji.
इक्विटी में इन्वेस्ट कर, ग्रोथ का है चांस। डेट में है लो रिस्क, बात मेरी मान।
गोल्ड सिर्फ गोल्ड, भैया ने भी यही किया।
सुन सबकी, कर मल्टी, मतलब मल्टी एसेट एलोकेशन फंड्स, यानी 3-in-1 फंड। ये इक्विटी, डेट, गोल्ड तीनों में एक साथ इन्वेस्ट करें। म्यूचुअल फंड निवेश बाजार जोखिमों के अधीन है। योजना से जुड़े सभी दस्तावेज ध्यान पूर्वक पढ़ें।
To make my vision a reality, I have to see clearly from every point of view. With my Verilux progressive lenses, I seamlessly transition from near to far and see every detail in sharp focus. When you see no limits, there are no limits. Verilux lenses by Essilor.
दृश्य शक्तियों पर हावी हो जाते हैं और उनके आपसी संघर्ष से होता है एक भीषण तांडव।
मैं आशुतोष राणा सुनाने आ रहा हूँ एक राजमहल और मौत माया मिथ्या से जुड़ी एक रोमांचक कहानी को। सुनिए मेरे साथ वरु थी।
मिर्ची प्लस पर
डाउनलोड कीजिए मिर्ची प्लस ऐप, कहानियों का असली अड्डा।
Welcome back. You're watching Buy Now Sell Now on ET Now, and let's continue with the queries from where we left actually. The next query that I have is coming in from Chandrasekharan, and he's writing to us from Coimbatore. He's saying that he's holding 1,000 shares of Rupa since the last 6 months at an average cost price of around 331 rupees per share. Kunal, he's saying he's making some losses, so now he wants to know whether he should hold or exit.
No, I think you can continue to hold on. So the stock has gone through that process of correction, a double test of the support. I think 300 was the low the stock had made in the month of June. 300 was the low the stock had made, I think, last month in the month of October. And it's managed to, I would say, protect the support for itself in this kind of a time span. So there could be sooner or later a stronger rally which can come back into Rupa. And if that happens, you may see a levels of at least 350, 360 for the stock. And if it's actually a big bottom for the stock price, then you may probably see the stock moving up above the 360 levels as well. So I think it's a good time to try and hold on to the stock, at least as of now.
Right, Kunal, this one's for you. Ravi Teja's writing was from Hyderabad. He's asking whether it's a good time to enter Bank of Baroda, looking for short-term profits of about 5%.
Well, it could be a tough one because after this kind of a mammoth PSU Bank rally, the risk reward generally goes out of the favor for traders who are entering into short-term positions. So you'll have to have a risk reward of 1:1. If you're looking out for a 5% upside, you should be ready for a 5% kind of a drawdown into the stock price. Only if you're comfortable with that kind of a risk reward should you enter into a stock like Bank of Baroda.
Right. This next one also is coming for you, Kunal. Sorry, Vijay, keeping you waiting, but there are a couple of short-term queries back to back. So let me take this one to you, Kunal, once more. This one's from Neha Toteja. And JK Lakshmi Cements that she's purchased at 569 rupees per share. She wants to know whether she should go ahead, book profits right now, or wait for higher returns. Also, she wants to know if you could give her some sort of targets over the next 2 to 3 months.
See, I think the cement pack overall is looking quite strong, right from the likes of Ambuja, ACC, towards even the mid-cap names, the likes of Dalmia Bharat, and then such are the names which have started to look very attractive on the charts. Even the likes of JK Lakshmi, for example, has given a big breakout on the short to medium-term chart. So when I look at the entire prospect of the cement sector, it's an indication that the sector is going through a big revival or a breakout phase. So I would probably expect that JK Lakshmi also would do pretty well for itself over the near term. 750 could be a target range. So 780 or 800 was the previous major high for JK Lakshmi, I think 2021 second half. So you can expect maybe a 750 as a moderate target for the stock over the near term.
Right. Kunal, this one's for you as well. Satya's writing was from Kerala. He would like to invest in ABR, FL and Devyani. Please advise if this is the right choice and entry prices for a small term.
See, Devyani, I think you can look to buy maybe at current levels. I think over the last few months, I've been advocating that 170, 175 is a good level to buy, Devyani International. So it's at 184 if I'm not wrong. So maybe another 5-7 rupees down. Let the stock come closer to this 175 plus band. That could be a good price to buy the stock. ABFRL, on the other hand, yes, the stock has done exceptionally well in the last 5-6 months. But right now the indicators are poised towards a corrective phase for the stock, and that correction, I believe, could last for at least another 5% for ABFRL. So a better price would be to start buying sub the 300 mark for ABFRL, and then look to average maybe another 5% downtick for the stock.
Okay, Vijay, let me try and take this one to you. This one is coming from Madhuri Balaji, who's writing to us. She wants a technical view, but she wants on a medium-term perspective. So she's looking at West Coast Paper, Zydus Life and CESE. Which of these companies do you think makes sense for her to advise right now for the medium term? This is she wants to enter these stocks afresh, actually.
I think that if you ask me, I think Zydus Life is a good buy in any correction, although it has shown a decent up move of about 100 rupees in the last 15-20 days. But I think that it's a good buy at around 420, 430. If somebody buys with a medium-term perspective, there is a good potential that it may go to 550. As far as West Coast Paper is concerned, again, it's one of my favorite stocks in the paper space. Even now, I think that it can, if somebody buys at these levels, it can go up to 650 odd. But yes, the Ukraine story has played over, and Europe was having a major paper shortage due to the energy bills they were having. Most of the paper mills they closed down, and the world was looking at India. So all these companies, good companies in India, JK Paper, West Coast Paper, they have done exceptionally well. over the last 6-7 months. But yes, I think that the story won't play over for a long time. If at all the war stops, we might see the energy prices coming down and the status quo is maintained, which used to be earlier. But again, for maybe a 20-30 rupees short gain, West Coast paper is good. But amongst all, I think that Zydus Life is one of the best picks.
Vijay, this one's for you as well. Chandrasekhar is writing to us from Chennai. Holding Dixon Technology, 100 shares, the average price of 4,200. Would like to have a 1-year target for this counter.
Well, the kind of PLI schemes government has rolled out, and these companies are eligible for the PLI scheme. And of course, with the Make in India push, the government wants that we should manufacture all the electronics, so to say, in our country. So Dixon is one of the companies involved in the manufacturing of electronic products. So definitely, I think that it's a good buy, but you need patience. It has the potential of going up to 5,300, 5,400. So buy it and sit back patiently. I think that in 1 year's time, you can get a very good return on this company.
This next query is for you, Kunal, and this one is coming from Seema. And Karnataka Bank, 1,000 shares, purchased at 139 rupees per share in the year 2018. Wants to know now what to do, hold or sell, and she would also like a stop loss and target from you.
See, I think it's interesting because I would probably sense that most of the other PSU banking names, as well as the smaller private sector names, they've started to spring up after 2-3 years of hiatus for themselves in terms of price performance. Now, when you see such kind of a strong, robust price performance where in a month, for example, or in a quarter so far, Karnataka Bank is up some 65-68%, for the current quarter. Now, that indicates that it's been a big turnaround for the stock. Now, such kind of big turnarounds, they have an impact and effect going into months as well as years also in most of the cases. So if you're not in any kind of a hurry, you've already waited for 3.5 odd years for Karnataka Bank, I think you should give it at least another maybe 6 months to 1 year from current levels. I would probably believe that this PSU banking rally is here to stay and grow. You could probably expect Karnataka Bank to maybe even cross back about the 200 mark, which has been the all-time high levels, but that would take some bit of more time from current levels. I would suggest a hold.
Right, back to you, Kunal. Manish Gangwani from Delhi. 1,000 shares of Nitin Spinners at 218 and 1,200 shares of Relaxo at 1,070. Can he hold for 2 months? Please advise prospects, is his question.
See, for Nitin Spinner, I would suggest an exit. I think that stock has been a big underperformer. Lack of volumes, lack of thrust in terms of prices. I would suggest an exit, and so would be the case with Relaxo. In fact, a better play from Relaxo, you can either shift towards a non-F&O stock like Metro Brands, or you can look at Bata India as well. The stock has been a bit more stronger relatively as compared to Relaxo. So you can switch from Relaxo to either of the two names, and Nitin Spinner you can look to exit.
Right. Vijay, this one is for you, and this one is coming from, just a second. Actually, I got it now. Okay, this one is from Gauri Gupta, and Gauri Gupta has Bajaj Finance, about 100 shares at a price of 7,200 rupees per share. She wants to know what should she do with this particular counter, because she's planning to hold on to it for the next 1 to 2 years. So, she wants to know whether it makes sense to go ahead with this strategy, stay put with Bajaj Finance, or should she look to move to other banking or NBFC stock instead?
No need to go anywhere. I think that it's a great company, great fundamentals, great performance in the past so many years. So just it's in a consolidation mode, and I think that when big stocks consolidate, they give huge breakouts. So I think once the breakout happens, it would shoot to 8,000 directly. So don't worry at all. It's a wonderful company, and I think, as I mentioned earlier, that good finance companies, good banks are going to do well in the near term, near to medium term. So definitely a hold recommendation from my side. No need to go anywhere, and just stay invested in this company.
Right. Vijay, this one's for you as well. Babu is writing to us from Kochi, Kerala. 100 shares of Tata Motors. Now the profit is 29%. He's asking whether it's the right time to exit. He's been keeping this stock for more than 9 months, he says.
Well, I don't know whether you have heard it or not, but I've been iterating about Tata Motors since last almost 1.5-2 years now. Tata Motors is India's Tesla. And it is going to show, a wonderful promise. The numbers they have posted, the JLR numbers in UK are very promising. In India also the numbers have been very good and the growth trajectory has been fantastic. And what I hear from the management and what I read is that there are several models they are already working on. So we might see a lot of changes happening, new models coming in. They already are the biggest player in the EV space. So I think that Tata Motors should be held on to. If somebody is a long-term investor, just keep on holding the stock. You're not going to lose money here. So definitely a hold from my side.
Right. Let me go on to this next question. And Kunal, this one is for you. Weber is writing to us and he wants to know whether he should add Divi's Laboratories at this price or should he wait. Divi's Laboratories quarter se quarter tak, you know what happens to it. Every time it comes out with numbers and the stock actually falls in trade. Today as well, it was down about 4% in trade after that big drop of 9% on Monday. What should he do? You think it's advisable to invest in Divi's Laboratories even for the shorter term?
See, I think I would suggest to wait out now. It's always very attractive to see large cap stocks correcting on the back of results. But then we've seen historically that whenever such kind of a stock they get into a corrective phase post results, the correction lasts for more than 10 to 15% further to the stock price. So maybe at current levels the stock may look very attractive in terms of prices, but it's nowhere close to oversold territories in indicators. So I would suggest a wait out for Divi's Lab, maybe over the next couple of days or maybe over the next couple of weeks. If the stock corrects further, say somewhere closer to 3,000, 3,100 mark is where I would believe that maybe the trade would look attractive, provided the indicators come into oversold territory. But as of now, the indicators are nowhere closer to oversold territory for Divi's Lab. I would suggest a wait.
Alright, so that's the take coming in on Divi's Laboratories. But hang in there, Vijay, as well as Kunal, because we are just being joined by the management of Gulf Oil Lubricants, and the company had come out with a mixed bag of numbers in the quarter gone by. If you look at the revenue, it was higher by about 35%. When you compare it on a quarter-on-quarter basis, it came in at around 720 crore rupees. You had the margins that saw a dip on a quarter-on-quarter basis. 11% is the margin versus 14.4% on a quarter-on-quarter basis. And also you had a marginal decline in the profit number. But what's the trajectory ahead? What should one look out for Gulf Oil Lubricants going ahead? We are joined by the management, Mr. Manish Gangwal, who is our CFO and President at the company. A very good morning to you, Mr. Gangwal. Thank you so much for joining us on ET Now to talk more about your numbers and the way forward for Gulf Oil Lubricants. Firstly, let me talk about the total sales in volumes. Total sale volumes in the quarter gone by. If you could give us an absolute number for that. Also, if you could shed some light on which segments actually contributed to the double-digit growth of core volumes.
Sure. Thank you. Good morning. Basically, it's been, as you rightly said, it's a mixed quarter for us. While the volume growth has been excellent and we have grown 2 to 3x the industry, because we know industry is growing at 2 to 3% and we have delivered a double-digit 10% volume growth. Overall, the revenues have grown 35% because we have been taking consistently price increases to pass on the input cost to the consumers, to the customers. So that has led to a very good revenue growth. But, the margins have taken a slight hit. Overall, our volume for the quarter is 32,000 KL on core lubricant. And we also sell a category which is AdBlue, which is an emission norm. As per emission norm, it is a new product in the market which is used in diesel vehicles, BS6 and all the BS6 diesel vehicles. So that has grown now to 14,500 KL for the quarter. So total volume is 46,500 KL. But the core lubricant has grown 10%. And of course, the AdBlue on a lower base has grown 360%. So overall, good top line growth. But because of the price increases taken, part of it is still to materialize. We took one price increase towards the end of September, which also will come in this quarter partially and fully from next quarter onwards. So all those will help us recoup our margins going forward.
Right, a very good morning, Mr. Gangwal. This is Adhiraj joining in. Thank you for speaking to us on ET Now. Now, sir, your EBITDA margins are a bit off owing to the higher crude prices. So do you plan on taking any price hikes? Or should investors consider the current levels of margins as the normalized ones going forward now?
So there are two factors you see in this 11% margin. One is that our top line has grown, whereas the margin per liter has been sort of stable. So as a percentage, it looks lower on a higher top line. The second is that we have taken price increases consistently. One being in the retail segment, we have taken towards the end of September, which will come into effect from, it takes 1 to 2 months to fully gain the benefit of that because of the pipeline inventory. So that will start giving us some results from this quarter and fully from next quarter. In the OEM and B2B segment also, we have been consistently negotiating with our customers, OEMs, on price increases, and there are formula-driven pricing also with OEMs. So all these are a continuous process of margin management. We feel that the current margins are, unless there is a tremendous global scenario changing or crude and INR depreciation stops somewhere the volatility, then perhaps we are nearing the bottom of the margin cycle, and from here on we should be looking at improvements quarter after quarter.
Gangwal, allow me to actually club in two questions over here. One, I want to understand the rural demand for agriculture, lubricants and motorcycle oil, and also with the onset of EV and the growing popularity of EV vehicles, how does this pan out for a lubricant market? Do you see that it will impact the demand going ahead, and also how do you plan to resolve that issue? And lastly, I also want to know if you could tell me about what sort of volume growth are you expecting for lubricant market for this entire financial year or calendar year?
So you're right, absolutely. I think there is some slowness in the rural demand, and rural is largely a motorcycle market and an agriculture tractor related sales. So that has been slightly weak in this quarter also because it was a seasonally low quarter from infrastructure activities and all those B2B sectors also. So overall, this quarter was slightly lower in terms of our B2C offtake because of motorcycle and agri. But we believe that a good monsoon, delayed monsoon has come, but that should give a pickup to the rural economy sometimes when the prices are stable. Also, continuously we are focusing on increasing our distribution. So we have gained our distribution double digit. We have grown and now we are close to 80,000 retail outlets across India. We are touching 80,000. So that's a quite heartening number, and our focus continues to be growing double digit, 2 to 3x the market, which we continue to aim on all the segments. Now, on the question of EV, while in certain segments EV is coming, like we see buses converting to EV, and to some extent there is a two-wheeler penetration mostly in the scooter segment, which is a certain 30% of the total two-wheeler segment. So there are pockets where the EV is coming, but overall on a lubricant market perspective, we have done studies, we have consulted with a lot of consultants globally and in India. I think the lubricant market is continuing to grow at least for the next 10 to 15 years. And while India is an under-penetrated country in terms of vehicle per capita, so overall the vehicle growth will be robust. And based on that, the both sector EV and the IC engine will take their share of the pie, and the lubricant will continue to grow, especially in the infrastructure segment. If you see, commercial vehicles are doing very well now. So the demand, 45-50% of the market is commercial vehicle and diesel engine oils. So that is continuing to grow. It will continue to grow very robustly going forward as well. Then we have a lower market share in passenger car, where we are focusing aggressively. And in this quarter also, we have grown double digit in the passenger car segment. So overall, we choose our battlefields. We have pockets of segments within segments where we concentrate and win. So overall, we are quite hopeful, while the market will continue to grow as per our estimates, at least for the next 10 to 15 years.
All right, then we'll leave it there. Thank you so much, Mr. Gangwal, for talking about the industry, the outlook that you see for your company, and what sort of growth strategies you've actually panned out for your company. And that was Mr. Gangwal of Gulf Oil Lubricants. But yes, we are taking a break right now on this edition of Buy Now, Sell Now. But viewers, stay tuned in, because we will come back with your queries after the break, so don't go anywhere.
Rakesh Jhunwala is a very quick decision maker. Some of our common friends tell me that you take a decision to invest millions in 10 minutes. You don't take hours, you take minutes. How does it work?
You got to catch the vital points. And second thing, remember I want analysis paralysis. You're investing in a future which is uncertain. You cannot predict it beyond a point.
आग को फैलने से रोकना मुश्किल है, पर नामुमकिन नहीं। अब फायरवॉल टेक्नोलॉजी के साथ सेंचुरी प्लाई क्लब प्राइम आग से बचाए।
Do we have to wait years for a cure?
Hey, Mommy, can we go make some pancakes?
Yeah, let's go. Or are we smarter than that?
बात सिर्फ मेरी नहीं, देश की थी। माइनस डिग्री में भी कॉन्फिडेंस प्लस में रहता था। वो जज्बा आज भी बरकरार है, सही मूव लेने के लिए, क्योंकि अब बात सिर्फ मेरी है।
सिग्नेचर ग्लोबल आपके इसी अंदाज को सल्यूट करता है। इंडिपेंडेंट फ्लोज फॉर द इंडिपेंडेंट यू।
So Pro Investing is all about trying to build that core portfolio. So we think that the three components of that is, one is a large cap fund, which is always first kind of entry level person investing into equities. We look at a large cap fund, which is essentially the blue chip companies which have emerged, which are much more stable. And then there is the flexi cap category, which is there, which is investing across market capitalization, agnostic to market cap. And then to add balance to the whole is the balance advantage category, where the asset allocation moves in tandem with the market valuation. So I think these three are the core part of one's portfolio, and Pro Investing is all about getting the mix right about these three core products.
Dadu,
yes?
What does premium mean?
Beta, premium you can say is like petrol. The car will keep going till the time it has petrol. Once petrol is over, the car stops.
But Dad, this time even if the petrol is over, our car won't stop.
How come?
With LIC's Jeevan Labh, even after the premium payment tenure is over, the policy's benefits continue.
That means our journey of happiness will continue non-stop.
LIC, हर पल आपके साथ।
मैं एक ऐप बनाऊंगा जो मुझे ब्रूनो को समझने में हेल्प करे। मैं एक मशीन बनाऊंगी जो मेरे ड्रीम्स रिकॉर्ड करेगा। मैं एक शू बना रही हूँ जिससे I can fly.
When do you think this will be possible?
I'm already working on it. जल्दी ASAP.
When you believe nothing is impossible, you see no limits. Engineering solutions for a limitless world. Kirloskar.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and we will continue taking your queries as promised. And let's try and squeeze in as many as we can over the last few minutes that we have on the show. Let me take this one to you, Kunal, and this one is coming from, one second, sorry. This one is coming from Mangesh, and he's saying, what should be HDFC Bank's price target point post-merger is what he's saying, but in the near term, where do you see HDFC Bank going? Because we've seen kind of a resurrection for the stock, right?
So 1550 is the breakout point for HDFC Bank. It's been unable to break past about this levels convincingly in the last 5-6 months. And I would suggest that if the stock breaks past about the 1550 mark, we could be looking at least another 150 points on the upside. So then the target potential for HDFC Bank would be as much as 1700 approximately.
Right. Kunal, this one's for you. Firstly, Sandeep, my apologies for not taking this query before. I've seen you writing to us before. Sandeep is writing to us from Tripura. Good morning. He's currently holding HDFC, RIL, TCS, Ultratech and Larsen. What can be added further to his portfolio? The time frame is looking for 3 to 4 years.
See, I think you have a good mix of large cap names from variety of other sectors. I would suggest that maybe add to few more banking stocks from the kitty, not the PSU banking names because of the way these stocks have run up, but from the private sector names, I would suggest maybe an IndusInd Bank or ICICI Bank even from current levels.
All right, with that, let me kick start with the rapid fire then. And this one is coming your way, Vijay. This one is from SA, and he's saying that he has 2,300 shares of Vodafone Idea, purchased at an average price of 11 rupees per share. What should he do? Should he sell or average at current price? Vijay, you need to unmute yourself.
Exit on rallies is the call.
Right, let me take the next one also then. This one's come from Jayashree. Wants to know, can accumulate Prince Pipes at current market price with 1 to 2 year outlook. The stock seems to be at good valuation now, Vijay.
Well, I think that Prince Pipe is a good company. Can be held on. That it has a potential 650 or maybe.
Right, Kunal, this one's for you. Vivek is writing to us, wants to know about ACE Action Construction. He wants to hold for 6 months. Should he enter?
Not at current levels, but I think closer to 305 could be a very good point to enter the stock.
All right. So Indumati also has ACE in her portfolio on positional trade. Bought at 306. Should hold or book out then?
So you can look to book out profits over here and look to buy back again just around your initial cost price.
Vijay, Hemant is writing to us. Bought Zodiac Energy at 140. Can he accumulate right now?
Well, I think that, it has shown some kind of consolidation. Although I don't track it, but yes, exit on.
Okay, Manish Raju, Kunal, this one is for you. 150 shares of Macrotech Developers, 1,134 rupees per share. Wants to know if there is any scope for an upside on this particular counter, or should he shift?
It's better if you shift towards maybe an Oberoi Realty. That's a much better stock. For Lodha Developers, I think the current level indicates that the stock will consolidate for at least another 1 to 3 months.
Right, Kunal, Santosh from Muscat, holding IEX. Should he add more? He's got 1,000 shares which were bought at 250 rupees.
So I think closer to 125, I've been advocating time and again that that's a better level to try and average out IEX. You may have to wait for possibly another 1 to 3 months.
All right, and with that, we are totally out of time on this edition of Buy Now, Sell Now and Query segment as well. Thank you so much, Kunal, as well as Vijay, for joining us on the show and resolving viewer queries. And viewers, yes, we did have a paucity of time on this edition of Buy Now, Sell Now, but we will try and take as many queries as possible come tomorrow. So do tune in to us at 11 a.m. tomorrow. But for now, it's goodbye from Adhiraj. I will continue in for Markets at Noon.
Do we have to wait years for a cure?
Hey, Mommy, can we go make some pancakes?
Yeah, let's go. Or are we smarter than that?